Hello, and welcome everyone. This is Ankit from Maverick Currencies here, and this is our weekend currency room, preparing for our upcoming week ahead from July 24th to July 29th. We are almost getting towards the end of this month, and there's a whole lot to talk about. I mean, last week was quite a week. There's a lot to discuss and talk about what we can take from this week into next week. So the equity markets breaks out of that downtrend. I mean, that was a big sort of change in the markets regime, but on a Friday we did lose about 1.5% of the gain. So we were looking pretty solid for the week, about 3.5%, and here we are only up about 2% for the week. We also had ECB that raised rates by 50 basis points. And remember, this was above expectation. The expectation was 25 basis points. And early on in the week, we actually got some reports out that they're actually looking to raise rates by 50. And we saw the euro actually start to do a little bit better early on. So when the news came out, it wasn't really a big surprise. And we actually did notice the euro kind of paired some gains after that. We also had cryptos that break out as well, above the 20 and now above the 50 SMA. And there's no changes from the Bank of Japan. And Bank of Japan remains this ultra dovish, ultra easy monetary policy. And while all the other central banks are raising rates, they just remains on the same path. So as you can see, there was a whole lot this last week with these breakouts that are happening after such a long time. So if you take a look at the economic numbers last week, I mean, we had the CPI printed out of New Zealand that was more than expected. Again, helped to keep it for a little bit, but didn't have a long-lasting impact. We also had some Friday. Again, the key numbers to really pay attention to Friday, and the reason why the markets did sell off was these manufacturing and services PMI numbers. I mean, these PMI numbers kind of shows you growth and contraction. And we actually take a look at these numbers. I mean, the U.S. services PMI number came out about 47. From 52 was the expectation. So anything below 50 is contraction. As you can see, Germany numbers, the manufacturing and services PMI, they were both at 49.2. So, I mean, these numbers, the US PMI numbers actually dip down below 50 for the first time in the last 2 years. I mean, this thing is usually stay above 50. So now, this is where we are starting to see this numbers indicating towards recession. We have been talking about all this recession fears. This start to materialize those fears. And that's one of the reasons why the equity markets did go down on a Friday. The question is, after these numbers, can we even advance further next week, or are we going to see a bit of a pairing up those gains that we saw last week? That's something we have to kind of wait and see from this upcoming week, because there's a whole lot to then discuss. So looking at last week reviews, let's take a look at some performance and percentage changes and see where the biggest movement was. And as you can see, the biggest movement was really in the crypto world. I mean, I know we have seen this big weeks in crypto, but this is the first time we've seen back to back. I mean, we have seen initial gains, but they don't hold those gains. So 11.21%. I mean, not the bestest week. We have seen 20% weeks in the past couple of months, but it was notable. Outside of that, the S&P and the VT World Stock Index was up more than 2%. Gold was up 1%, and then oil actually was down 3%. So it seems like oil is kind of losing its ground, and each rally or those gains are being sold off. So there's a bit of a regime change that we're noticing within the oil market. Now let's take a look at S&P chart. Now you can see a clear downtrend that started back in April, and we have been solidly below it for the longest time. I mean, each rally has been sold off, and then on this period we have actually gone sideways. So we were downtrending quite aggressively, and then we actually went sideways here for a bit, and now we are getting a breakout. So notice that we are above the 20, the 50. The last time we were above the 20, the 50 was actually a long time ago. I mean, I think we had to go back further. But I mean, this chart actually gives us a bit of a turning point. The question is, can we hold above this 390 on the S&P area? So I think what we are going to see is that we're going to see a retest next week. Maybe early in the week, we'll try to maybe push lower towards it, and this will be a test. If it does test it and recovers, I think maybe this can take an opportunity to every rally further. But if this falls back below 390, Remember, that's the drawing the line in the sand there. If it does break below it, then we are back within that range. And there's actually a lot of data next week that could really charge that move one way or the other with the FOMC rate decision due next week. So that's what we're looking at with the S&P 500. And again, we're looking at the S&P 500 so we can understand what the risk trends are. Are we in a risk-on environment or are we in a risk-off environment? So the S&P kind of give us a gauge for what the markets are doing. Now let's take a look at the current crypto world here. As you can see, the Ethereum was the best cryptocurrency out there, and we actually discussed that in our last week's currency room, where Ethereum actually was sitting at the 50-day moving average, and so we got a nice little breakout over there. The Bitcoin lagging a little bit there, Bitcoin Cash at 15%. So overall, as you can see, these three main coins like Bitcoin and Ethereum did well, but outside of that, like Litecoin or Solana or Cardano, not so much. So this is where I think it's better if you're playing the cryptocurrency to stick with the one that's performing well, which is Ethereum. Now taking a look at currency markets, I mean, currency market was a mixed bag. And I know for a lot of traders, last week was not an easy week to trade. But here's the reason why. Last week was a bit of an upside down week, which means the outperformers were the underperformers and the underperformers were the outperformers. So we have the dollar, which actually been doing well. As you can see that it actually pulled back 1.33%. So a bit of a counter trend move. The yen, who has been pretty weak, actually was up 0.53%. So there was a big change that we saw between the dollar and the yen, and I think we'll be taking a look at dollar-yen pairing to see why is there a bit of a regime change or just a short-term move. Now, euro, you can see it was almost flat for the week. This is not encouraging, especially if you're looking for adding gains to the euro after the ECB rate hike. I think the rate hike is not going to impact as much, and the euro likely to fall down further, especially now with the negative print. Now, Swiss franc was slightly better. There was more resilience from the Swiss franc compared to the euro, and the pound again remains a weaker currency, 0.22%, and so far the trend looks still pretty weak. So here we are with another change. Canadian dollar was actually weak, so it did pull back towards the end of the week, and again, same thing. It's kind of following some of the move from the dollar, but we have to kind of see what the CAD is doing, especially is this about to change, or it's just a short-term pullback. I mean, this is an important thing to continue looking for, are these little pullbacks that we see within a trend. If you see a pullback, so you get a week like that, is that a week enough to mark a change in that regime, or is it just a little short-term pullback that's going to rise further? So we'll have to kind of continue looking for that next week. We have the Aussie that did really well, 0.73%. And Kiwi, which again was lagging at 0.2. I must say that if you out of all the currencies, Kiwi is actually the one that's actually very difficult to trade because it does rally, and then it gives all the gains, and then it rallies again, it gets stronger, it gives all the gains again. So what it does is that it creates a difficult environment because you want to buy when it's strong, you want to buy into strength, but that strength in turn is to a weakness. So there's a lot of back and forth between the Kiwi. So I think a big question mark on the Kiwi move. But Aussie actually performing much better than the Kiwi. So let's actually take a look at do a quick market analysis. Take a look at how things are setting up and where we need to be so we can prepare ourselves for this upcoming week. So the world. I mean, we already looked at the S&P 500 chart. The world market's kind of doing the exact same thing. And if you take a look at the chart for the crypto world, crypto world, we got above the 20 to 50, but notice that we just went sideways. As soon as we got to that level, we've been sideways. So remember, follow through is very important. The breakout, great, but follow through is more important. I mean, if you take a look at the VT, which is the World Stock Index, we barely got above that trend line, and then we pull back. So the S&P chart looks a little bit more bullish as we go back into this other chart. And there's actually better price action. So when we take a look at the markets, we are above the 20, we are above the 50, and so that will give us a +2 score on the equity markets. But I think there's still a lot of caution next week with the FOMC rate decision ahead. That's again due on Wednesday. So we'll be actually talking and meeting live in our midweek, and they're actually talking about raising rates by 75 basis points. I mean, if we look at the expectation percentages, there's about an 80% chance for the Fed to raise rates by 75 basis points. Now, the one full percentage rate hike, remember when we got the CPI, hot CPI print, and the dollar actually, or the expectation rose up, that actually diminished it quite aggressively. So that is down to about 20%. So next week we'll have to see if the Fed can surprise. I mean, with the cooling numbers, can they still be very aggressive? We have to wait and see. But I think right now, 75 basis point is kind of priced into the markets. So maybe we'll see the dollar. I mean, dollar had a nice little pullback. Maybe we'll see a bit of a rally early in the week, and maybe we'll sell on the news if that's already priced in. But we'll have to wait and see on Wednesday. Outside of that, we have the Aussie CPI. Again, they're actually looking for the forecast is a bit lower on the quarter over quarter, with the trend CPI about so we're not really expecting anything to drop right now. I think inflation is still running hot. But again, these data are lagged. So I think right now with the drop in commodity and oil prices, the inflation will come down. But for now, I think for these months' number, they'll probably stay strong. Now we're looking at the GDP for the U.S. advanced GDP quarter over quarter. Expectation is 0.4. So there's, as you can see, this is the main event on Wednesday that's likely to cause a move which in markets and in the U.S. dollar. And outside of that, there's little events here and there, like on a Thursday and a Friday, the PC price index as well. Next week is also a big earnings week, so big companies like Google, Apple, I mean, they announce results. And remember, with the slowdown, we're not looking at great earnings, and if we have to wait and see if that could cause a bit of a pressure on the markets for the further downside. So the equity markets, I think, likely to retest that prior resistance to now support. The question is, can we hold that? And if it does, I think we can then move higher off of it. That would become the new support. If that doesn't become a new support, then we are back in the range. Central banks, FOMC rate statement on Wednesday, and economic reports. I think the more important one will be on a Thursday with the advanced GDP and the PCE price index on Friday. So let's do a quick currency analysis, take a look at relative strength and weakness, look at our velocity scores, and take a look at our trend score and see which way things are setting up for. So in the crypto world, let's actually start with Bitcoin. As you can see, Bitcoin, actually, the velocity score is moving down to a 0 because the movement has kind of stalled a little bit. But that's okay. After a big week like last week, we could have a bit of a consolidation. So that's what we're seeing. We're seeing consolidation. Look at these candlesticks, unable to make a run. A lot of little shadows here. So I think the trend score has turned to a +1, is above the 20-day moving average. But I think we have to still use the next week as a make it or break it for these cryptos. The last thing you want to see next week is that it gives up the gains. So we look at the Bitcoin Cash, same thing, a +1 above the 20, but it's sitting right at the 50, and the velocity is just setting up a 0. So which means that the trend is making a change, but right now it's not the right time to pull the trigger because the velocity is going sideways. Now Litecoin, the Ethereum actually chart looks the best. I mean, look at the divergence there. I mean, we broke out, we're sitting above it. And I mean, this thing has a 0 velocity, but Ethereum overall has a +2. So out of those cryptos, Ethereum actually looks the best, and Litecoin actually kind of looks the worst, with a little bit more of the weaker tone. So 0 on the trend score and 0 on the velocity. So it's pretty clear if you're looking at crypto which way to look for. Now let's talk about currency world. And I know this is an important week because we're trying to understand if this pullback that we saw last week is a glimpse of a change, or is it just a short-term pullback? You can see that the dollar has been pretty strong overall. So let's go back to the dollar here. And you can see that dollar was actually pretty strong overall, and all pullbacks are being bought out. And here we are getting a pullback. So last 3 or 4 or 5 days were onto the downside, and we just got below the 15-20-day moving average. We still have the 50-day moving intact. So this is, I think, it's a make it or break it. Last time, remember, we got that pullback in the dollar. We actually got a nice pullback that lasted for, I think, 2 to 3 weeks before it rose further. I mean, this time around, is pulling back, but this is pulling back ahead of the FOMC data statement. So this is where I think the dollar is not really catching a bid, even going into the FOMC. But overall, the trend still stays strong. I mean, could this be a buying opportunity? Absolutely. But what we need to see is that if this is a trend change, we need to establish a lower high with a lower low. That would establish a trend change. So in the grand scheme of things, if you're a trend trader, this is still a pullback in the bigger scheme. But for trend traders to jump on an opposite trend, then this needs to make a lower high. So I think we can actually make a case early next week. I mean, on Friday, as you can see where the markets is sold off, this thing start to rally a little bit. And this in the hindsight, I mean, this is happening while the equity markets are breaking out. So there's definitely a clear correlation between the equity markets and the dollar. So when the risk trends improve, people flock into other currencies and actually sells the dollar. And then on the other hand, when market looks terrible, people buy the dollar. So on a Friday was a good example where people came in with the dollar on the upside. I think early on next week, what I would like to see is maybe get another couple of 2 or 3 days up there. And if this is a trend change, then maybe, sell off of that, and that will mark a trend changing move for me. But I think early next week, better to be on the long side of the dollar than the short side with the Fed rate. Now with the velocity, we are at a -1. I mean, nice little positive candle on a Friday. I think this could lead us to a bit of a rally early in next week. So still holding intact until anything changes. Now this was a bit of a surprise for traders because we actually had the Japanese yen actually did rally. I mean, look at the 4-hour. The trend has been on the downside. It got above right here, and then we got a rally on a Friday. So you can see that this was a pretty strong rally. A lot of the yen crosses were down 1%, 1.5%. But if you look at the trend score, this is still pretty weak. I mean, we are coming off of the lows here. So at this point, we can see that it's bouncing off of this support area right there. So we are still below the 20, below the 50, and we still need to make a bit of a run before we decide, well, yeah, this is a trend changing move. I mean, we have seen this back in May. Remember back in May, like the dollar looked pretty weak. It had a bit of a rally, got above the 20-day moving average, did pull back, and then got a nice little run after that. Is this ready for that? I mean, Bank of Japan didn't make any change, and that's why traders were kind of surprised. And again, this is where you have to just go with the market price action. Bank of Japan, there was no expectation for them to be raising, so everything was already priced in. And that's what you have to understand, is things get priced in ahead of time. So with Bank of Japan, no decision was not a big surprise. If they did made a move, then that would have been a big surprise. So there's no surprise factor there, and the yen seems to cut a bit like last week. But still, if this is a trend changing move, what we need to see is a bit of a pullback, and then see a rally. That will mark a trend changing move. Now going with the Swiss franc, I mean, this thing has been holding steadily above the 20-day moving average, still quite far from the 50-day moving average. And then on the velocity score, this is picking up. So I think I like this further to the upside as a +2 if this could get above it. This will only be a short if it gives below the 20-day moving average. But I think at this point, it doesn't seem like Swiss franc wants to weaken, because if you want to short something, you have the euro for it. And you can see with the euro, I mean, we actually had a nice little bear rally on the euro. And at this point, if you're trend trading, I mean, this is a good little bear rally to jump on into. We got a nice little touchdown to the level here, had a bit of a rally, but I still like this on a further downside. It was below the 20, 50, the 200 moving average. And even on the velocity score, I mean, look at this ECB rate hike. It came over here, and then we got a nice little pullback right after that. So at this point, what we're noticing is that it pulls back, make a base, pulls back, maybe have a bear rally. So I still like it further to the downside. The trend score is a -3, velocity is a -2. I think euro is a sell for me. Now looking at Europe, the pound, I mean, pound's the same way. I mean, this thing has been not an aggressive currency to trade. I mean, the trend score is -3, but notice that, look at the wicks on these candles. Not so great. So which means that it's not a super aggressive sell, even though it's a -3. I think you still need to, sell the rallies on the pound as these things are selling off. So now let's get back to the growth currencies, because this is where we got a nice little movement on the downside with the CAD. I mean, CAD rejected, or it was hovering around this breakout point and then to pull back. So at this point, was it easy to call this move down? Absolutely not. On a Monday, we can see if this CAD try to attempt to actually get back above it. This thing also is very intact between the moving averages. It's every time it pulled back, it rallied, it pulled back, and it rallies. But at this point, I think it's still early to call that. Velocity was a -2 on Friday, or most part of the week, and we have to kind of see next week if this has further downside. Remember, if you're looking for trend changes, we are only piercing through the 20. If it gets to a 50-day moving average, have a little bear rally, then that would mark a trend change. So this is just a pullback in the grand scheme of things, but this one, it looks like it's almost falling back within this range compared to hovering around where they was. Now let's take a look at Aussie and the Kiwi, because Aussie had a nice little rally here. Again, not a super aggressive rally. You can see it has been trendless for the longest time. It's staying at a 0. But this time it got above this 50-day moving average, and with a nice little reversal candle on Friday. So we had a nice little rally. Now, question is that can this sustain, or is it just going to be sell here? So as you can see that velocity was a -1, trend was a +1. On a Friday, this was not a great currency to kind of hold on to. But at this point, RSI is dropping lower. I would rather take a look at a downside on this little bear rally here. I think if the dollar actually remains strong, it will continue to put pressure on the Aussie and the CAD, Aussie and the Kiwi, so we can see the rallies to sell off into. But if we actually continue to see the markets get better, the environment improves, and the dollar pullbacks, and then again, yeah, I would like the Aussie to be on the long side here. But remember, it's not super aggressive to the downside. Momentum for the last few days were on the upside, but this could be coming to an end if it does have a more further follow through on early next week. Now, Kiwi. Now, this is a frustrating currency to trade. I know some traders were trading it, and I think Aussie still is a better candidate over Kiwi. But the problem is that sometimes the Aussie takes a lead, sometimes the Kiwi takes a lead, but the Kiwi's lead is never lasting longer. I mean, we saw early last week, market opened up, we got a nice little rally, and we sold off, we rallied, then we sold off again, and then we rallied right here. So there's a lot of back and forth. So I think 0 and 0 on a trend score and velocity score. Be cautious with the Kiwi. I mean, Kiwi is not a currency you want to add on when it's actually moving to the upside. I mean, it's easier to add something on when having nice follow through, but I think you want to be always cautious about. You also always want to be cautious about this move in the Kiwi here. So let's talk about trend scores, and let's take a look at velocity scores. So trend score, we have a +2 on a Swiss franc and a +1 and +1 on a Kiwi, also on the CAD and the dollar. I mean, this can easily move to the to the right side if there is a pullback as follow through to the upside. If it continues to deteriorate, then you know that it's actually sliding lower. So I think it's only took a one step down. It used to be +2 last week, and now it's a +1. Still early to kind of call that if this is a short-term pullback. Now looking at the week score, I mean, trend is still weak on the euro. Trend is still weak on the pound, and in the yen, I think it's still weak. So can we look at this last week move and use as a selling opportunity in the yen? I think yen is a bit of a question mark for me. So we'll have to look for any sort of follow through next week, and that will give us a confirmation. And Kiwi again remains 0. So the cryptocurrencies again now move to a +1. They were at 0 for the longest time. Now they move to a +1. Now velocity, in the velocity right now, the cryptos are at 0, and the Kiwis at a 0. So there's the velocity score on some of these currencies that are on a positive trend. You'll notice they're on the negative side, and the yen, which is on a -2, is on the plus side. So velocity is upside down right now. You have to kind of wait and see next week if this follow through or this velocity can continue in these currencies to these directions. I still like Aussie on a downside, and again, pound and euro is definitely on my weaker list. I think the bigger question mark is dollar CAD over here in the -1 and -2. Can they move up? And then Swiss franc, can they move down? I think these three currencies can like to make a bit of a shift early on next week. So bullish trades, again, dollar cat still looks good, but they're in a pullback, so you gotta wait. So I'm not really 100% on what to buy. I definitely like euro short, pound short, but outside of that, if you say, do I want to buy the Aussie? I mean, Aussie with a -1 and +1, don't really see a reason. Kiwi plus 0 and 0, I don't really see a reason. So you can see that there's Swiss franc is the only one that stands out as a bullish. But if you take a look at dollar was a +1 and a -1, so it's in a pullback. And then we have the yen, which is kind of upside down. So this is a question mark as well, if this is going to have a follow through. So looking at this week, I think next week is pretty simple. Maybe look for a relief rally early on and then see what else conspires towards the end of the week. So let's take a look at possible trades ahead, jump into some charts, and talk about some key data or key charts. So looking at the movements last week, again, this Friday's move, the question is, we got a nice little rally on a Friday. So let's look at hourly chart. On a dollar, it had a nice little rally, but it's kind of pulled back a little bit. For this to kind of mark a rally change, we need to see a higher high to establish. We had a long base on the dollar, and this is an hourly chart. We can even go on a 4-hour chart to see what's going on here. But you can clearly see the momentum kind of shifted on the dollar going into this week, and now it's pulling back. So it peaked after the CPI figures. The expectation for a 1% rate hike kind of pull back, and then this thing has been pulling back as well. So I think dollar, be cautious about it in the short term. I think we could see this try to get go in the sideways range. But with the Fed ahead, I mean, I don't want to be short any currency to be short going into these central bank events. I mean, if you take a look at the crypto world right now, as they're open 24/7, we're noticing a pullback in Ethereum. We're looking at pullback in the crypto world here. So one thing to note is that the dollar did pull back when everything was looking good. The markets were looking good, and the environment was better. Ethereum is rallying, so the dollar pulled back. If there's a flight to safety again after this last week's number, I mean, let's take a look at the SPX or US 500, so we get to see how they close. Actually, let's go back. US 500. You can see that we moved aggressively to the downside. Had a little bit of bear rally towards the end of the day. Now, if this falls back further, I think we have further downside risk here. So this is a 4-hour chart. Nice little pullback, a nice little reversal on a 4-hour chart. And if this is a further continuation to the downside, just like how the crypto world is showing, there's not a whole lot of strength that we are seeing right now compared to last week. Last week, if you look at it, things were rallying. So the mood is not the greatest because of Friday's weak PMI numbers, which is now materializing the recession fears. So in that case, if the Aussie pull back, I mean, look at the Aussie trend as well. It's actually now on a negative side here with this reversal. So Friday could be a reversal day and then have a continuation early on next week. And that's something we need to pay attention to. Aussie, like I said, if it does break lower, I think there's a further test. It could come to the downside here. RSI is falling here. The RSI was rising here, and now RSI is falling here. Now, taking a look at Kiwi is the same outlook, but I mean, this is a choppy chart. So we'll have a sideways look on the Kiwi here. Now, Euro. I know a lot of traders had a question about the Euro. I think this is still bear rally. I think Euro dollar can still test the parity level again. I mean, if you take a look at Euro and see how many places it has actually broken lower. I mean, Euro Swiss franc has below the parity level. Remember, this is a chart that I was watching on Thursday and say if the Euro has some further strength, it will try to get back above these parity levels. I mean, take a look at Swiss franc. I mean, this chart, this is a beautiful chart for the further downside. I mean, we were hovering around 99.50. We were actually looking and see if this can break above. Actually, it's fallen down. So this is where Euro Swiss franc actually looks the best for me on the further downside. Look at the daily chart too. Nice little rally and move lower. So this is clearly below parity. So the question is, can the euro move against parity for other levels? I definitely think it can. I think the first thing I'll be looking for the euro dollar. Let's see if the euro dollar actually can pull back further. So, and then test the parity level, which is again at the around the Fed event. If the dollar can strengthen again, I think this can easily fall lower. So notice that the dollar did pull back while euro was rallying as well. So this thing, I do like it further on the downside. I know at this point, I know traders don't want this to break below the parity level, but I think we can exactly see what happened with the euro Swiss franc, and it actually breaks lower. So I do like further to the downside on this euro pairs here. And you can also take a look at euro against other ones like euro yen. I mean, look at the sharp pullback after this big rally here. So 4-hour chart, again, nice little reversals that we have on the daily chart. So I mean, at this point, I mean, I had questions for traders like, hey, is this marking a trend changing move in the yen crosses? I mean, euro yen, absolutely, because we established a lower high. We can easily move towards a lower low. So that's pretty clear to be here. But if I take a look at outside, on let's say Aussie yen, I mean Aussie yen, we got the resistance right here. I mean, it's pretty unclear outside of the euro if this yen reversals was really a true reversal. I mean, this is just a short-term pullback, but for this to establish a continuation, it's a bit of a long shot here. So dollar yen is the one that you need to pay attention to. I mean, look at that dollar yen. Nice little 2-day move, pulling back from 138 down to 136. Question is this just a buying opportunity? If you look back, each time it pulled back, it actually rallied very nicely here. I mean, you can see the last time we got a nice little 2-day pullback were back in June. We did pull back from this two levels, and then we got a nice little bullish engulfing candle. And we did pull back over here, slight pullback here, and then we'd rally right after that. So I think at this point, if you're trading with a trend, this is just a short-term pullback. It's still early to call it a reversal. So let's talk about what we like next week. So if the dollar stays strong, I'm paying attention to dollar CAD. I mean, look at that nice reversal that happened. It held on to the support here. So the CAD is the one that I'm still unsure, because despite of all of that, I mean, this thing is range bound, right? So we got a nice little pullback onto the downside. RSI is falling. If this has further downside, I mean, dollar CAD actually looks the best to me to play it to the upside. I mean, it did break above that 132 just to only pull back at 128. I think I would like to see it making an attempt to maybe go further to the upside at 130. So dollar CAD goes with the list here. If I go with the Aussie dollar, I still like Aussie dollar to the downside. I mean, here's the thing with the Aussie dollar. I like it because of the technical setup here. So you can see that the 70 level was a very important level of support. This is a daily chart. You can see that this is a very important level of support. Now it broke that support in a very small fashion. I mean, both times that you can see here and here, it tried to get above it and then had a nice little sell-off here. This time around, we got a nice little rally, and you can see on Friday it touched that resistance and pulled back. So this is a perfect bear rally in the grand scheme of things. If you draw a trend line on this, and then look at the setup, this is a nice little bear rally. So if this is a bear rally, I think that's what you want to be short instead of being long. If you are trying to buy, I think this needs to move above that certain level. But at this point, this was a nice little bear rally. We went from 67 to 69. This is a nice little percentage change from the bottom to the high here, about 3%. So let's see if this can give back further gains. I mean, we have a nice reversal candle, but on a Monday and a Tuesday, we want to see it actually moves below Friday's lows in order to conclude that this is a reversal. So this one I really like as well. We can also take a look at pound dollar. As you can see, that pound dollar is not so great. They had a little rally here, but the rally could easily be shorted into. So in conclusion, I mean, we'd still like euro dollar crosses on the upside early in the week, maybe after the announcement. That's a total different story. How the dollar reacts to it, because if you go back in the last few meetings and you take a look at the dollar movement, the dollar was actually just sold on the news and then rallied right after. You should look at the last. Let's actually take a look at the FinViz here and then see what the last the FOMC rate decision was, and that was on June the 15th and May the 4th. You can see that going back in time, June 15th, it did sell off on the news. And then you go back on May 4th, it did sell off right on the news. So you can see that it sells off right on the news. But preceding to it, we did rally. I mean, this is why this time is kind of different, because all the other times the dollar was rallying into the Fed rate. Both times dollar was rallying. This time dollar is not rallying. So a bit of a regime change. If I get a bit of a rally here, I will see if this can actually hold on Wednesday after the rate hike. Again, if they can pull a 1% rate hike, that would be a big surprise. It will take it by, the markets will be totally taken off by that, and then dollar would actually rally further out the upside. So 75 basis point, I don't really see making a big impact on the dollar. So maybe this time around, this Fed event is not really a big event, because things are all like really priced in and things have already pulled back. So that's just to keep in mind that this time is different than the last two times. So outside of that, let's take a look at some of the relative strength of weakness. Again, things are just chopping of certain things. Like look at Aussie Kiwi. This thing has been going sideways. You know, there are days where Aussie's doing better, there are days where Kiwi's doing better. Definitely a bit of a back and forth there. But as you can see that the 111 is a key level of resistance. So one of the things that we did notice, that Swiss franc charts actually looks decent here. So let's take a look at Swiss franc to the upside. So let's take a look at Aussie Swiss franc. And I think that's where we're getting decent setups here. Look at Aussie Swiss franc, pull back very nicely. We have CAD Swiss franc. I mean, that thing also pulled very nicely. So I think Swiss franc actually looks nice here. But CAD Swiss franc is pulling back here again. So I actually like some of the Swiss franc crosses, the way they're setting up after this consolidation. But I think out of the Swiss franc crosses, the best one that I find is the Euro Swiss franc. I mean, this is ready for a breakdown further. But if I take a look at strength and weakness between dollar and Swiss franc, you can see the dollar also pulled back against the Swiss franc. So maybe early next week, we will see a bit of a consolidation between dollar and Swiss franc. But pay attention to this pair before you decide, do I want to jump in with the dollar or do I want to jump in with the Swiss franc? And same thing, if you try to decide between dollar and the yen crosses, then pay attention to the yen, dollar yen pairing as well. So that's the outlook here. Again, I think things are setting up nicely. I mean, if 4-hour chart, we have a nice little trend changing on this dollar yen, but looking for a rally early in the week. Then maybe we'll see what happens after that, as what happened with the equity markets, with the earnings reports that's coming up. I think those are the things that are likely to move the markets. So that's the outlook. Market to consolidate gains ahead of the FOMC. Looking for confirmations. If you're looking for changes or trend changing move, looking for confirmation. As far as the schedule goes, we'll be meeting again next week. Actually, we don't have any classes in the schedule, but if we do, we'll just put it on the schedule there. But on Wednesday, we'll be meeting live for the midweek, and then at the same time, we'll be also talking about the Fed rate statement, and then we'll be trading through it. Thanks everyone for joining. Enjoy your rest of the weekend ahead, and be prepared and get ready for next week. Take care, everyone. Cheers.